As you might imagine, I have been overwhelmed by messages of sympathy and understanding from shareholders of Gulf Keystone in recent days. But at least on the side, to keep myself amused, I've been trying to identify some promising oil minnows, the first of which here is Circle Oil. Here the main attraction is the way that in recent months, at least since the start of the year, the shares have been trying to establish its support back above the former June 16 pence low, from which the shares bounced twice up to 22, 23 pence. I'm hoping for the same thing again. There've been three bear traps below, three main bear traps below 16 pence since December, and it looks as though the stock is finally finding support above 16. Looks like 16.5 at the 50-day moving average. If you're not sure of the bullish credentials here, you'd wait for a weekly close above the 200-day moving average at 18. But it does look like with the RSI now firmly above neutral 50 at 57, and having bounced out that neutral zone to start the month, that we are biased towards the upside, with the obvious target here being a return to 22, 23 pence on a 2 to 3 month time frame. Another interesting prospect here comes in the form of Max Petroleum. Quite a lot of speculation here at the moment amongst traders following the stock. What we have now is nearly a year of base building around the 4 pence mark since the massive gap down in June last year. The plus point here is really the way that, or the plus points are the way that the price action is starting to push back above the 200-day moving average, just around the 4 pence level. There's been an unfilled gap to the upside here this week through the 20-day moving average at 3.7 pence. And we've got quite a few support points here at the RSI 30 zone, the oversold zone, as well, with a bit of bullish divergence coming in as well. So RSI in the right place, the gap, and consolidation near 4 pence. Triple support since September around at and above 3.5 pence as well. So a whole list of encouraging, if not decisive, technical indications here. What you would say really is, while we're above the 20-day line at 3.7 pence through 3.75 pence, we could look for a return to the post-gap resistance, which is around 5 pence. So a decent upside there, risking about a third of a penny to make 1 whole pence. Moving on to Sound Oil, and this is arguably the best of the bunch, so the best still last in a way, in the sense that we have a clear, apart from the bear trap here in September, we have a clear uptrend line here, which has been tested 3 times now since February, around the 7.5 pence level now. You're running into the 200-day moving average at around 7.8 pence. If you were fussy, you would wait for a weekly close above that, but really it looks like there's enough momentum here now with the higher support for 2013 to see the shares return to the top of the 1-year range at 14, 15 pence plus. There's also a sort of RSI line of support as well coming in from July last year, and we seem to be holding that too. So a reasonable amount of plus points there, and really if the stock went much below 7 pence, you would abandon the mission, but it looks as though above 7.5 pence we are heading higher.